Yeah, the annotated Livermore book, I have it too. It's really good. I love if you like market history and really study the psychology and all like the behaviors behind it. I think everyone, if you really want to deepen your understanding of human psychology and markets and market history, you should get the annotated version of Reminiscences. You will get a deeper understanding of what let's see, where's the annotated? Here it is. This one, the annotated version. Like what it does is it takes the characters and the events in the book, and it has like these separate boxes where it explains like what went down and why. It's super interesting. I recommend everyone buy this one. The best trading book ever, and it's not even close. It's not even close. There's so many lessons in this book, both good and bad, both what things you should do and things you shouldn't do. And also the one that Pradeep has been talking about, will it make the boat go faster? This one, Pradeep has been talking about this one. Let's see, will it go faster? Will it make, is this the same book? Wait. Yeah, Ben Hunt Davis. Which one? What? Oh, this is the Kindle version, okay. So Pradeep says there's a lot of trading lessons in here. Yeah, I'm gonna click this one. I'm gonna buy it right now. I'm gonna spend some money to invest in myself. Increase my brain power. Guys, stop looking at these decade-long bases. It's irrelevant. It's irrelevant that MU, there's no base here. This is a completely different stock than it was back in 2000. Like, look at this thing. Look at the market cap, okay? Since there's more shares outstanding now, okay? So the market cap today, even though the price was the same back in early 2000, the market cap today is twice as high because there's twice as many shares outstanding. You know, stop looking at the super long-term time frames. It's irrelevant. It's totally irrelevant. It's not even the same stock anymore. What you need to be focusing on, it's in the past 6 months, it's made a big move for almost a mega cap stock. It's a huge move, a double. Look at how linear it is, and now it's building a flag. That's what you need to be concerned with, not something that happened 10 years ago, 20 years ago. Totally irrelevant. You're doing it wrong. Well, generally, like, you know, going back more than a few years, it's not really, like, what you need to be focusing on is what's happened the past 3, 6 months or 12 months. Like, we are looking for recent momentum, not something that happened, you know, 20 years ago. It's not going to help us. Like, if you're a short-term swing trader, like, going back more than a few years, it's totally irrelevant. Yeah, totally irrelevant for the trade we're looking for. Now, obviously, you should go back and study these stocks and look at what they did, how they moved, like study the patterns, because the patterns are always the same. It's the same patterns over and over again. But if you're looking to buy MU, if it breaks out of this, I don't know, 88 area or whatever, if it breaks out on earnings tomorrow, what happened 20 years ago, it's just, it's totally irrelevant. No one no one who was long this stock back in 2000 is still long the stock. Not a single person or fund. Maybe there's a couple. I mean, there's always someone, but you know, it's not even this. It's not the same stock anymore. It's like, it's totally irrelevant. What about 2016? Yeah, it took out the 2000 highs, but the QQQs had already been going up for 6-7 years. There's nothing special about, like, you don't need to see this. Like, you can go back and just see, oh wow, look, it broke out of a flag. Look at this range here. Okay, this is irrelevant. This has no meaning. What matters is it had recent momentum and it was flagging with higher lows. No one should be trading with a cash account. Everyone should get a margin account. But just because you have a margin account doesn't mean you have to use the margin. I don't even get the point of cash accounts. Yeah, Baidu was a parabolic long. I just didn't trade it. It was a perfect parabolic long setup. Look at this thing. It was down 32% in 3 sessions. And this is a large cap. Actually, it was a mega cap stock just a few weeks ago. Yeah, that's a big move. It had one leg lower. It went down 22%. Had a little bit of a bounce. Had a second leg lower. Was down another 25%. And here was third leg lower. The third day on the third leg. That was a 5-star parabolic long. I wish I had done. I did it. But unfortunately I didn't. Well, the entry on this thing was when it broke when it stopped going down and built this first green 60-minute candle, and the break of that was the entry. Like, all I want from the market, like, I'm a simple guy. I don't want much. I don't demand much. But I would love to. I would love if the market gave us a $10 million opportunity. I know, it's not asking for much. I just want one $10 million opportunity. And free Nocco. Yeah, that's all I ask. I don't ask for much. Does Amplify require a suit? Are they suits? Well, that's the big, yeah, that's the good big question. Like, you know, that's the thing with prop firms, right? Like, if you're wildly successful, if you're a really good trader, you would pretty much, there's no point in joining a prop firm. Because if you're a good trader, you're gonna grow your accounts very easily on your own. You don't need like outside capital. So it only makes sense for traders who are not wildly successful, who still maybe need some mentorship. So I don't know. I don't really, or maybe like if you really need to go to an office and really need, you know, people around you. If you're like a very, very highly social person, you can't sit in a room alone. Other than that, I don't really get it. And they take you a lot of your profits. I don't know, is it a good business model? I'm not sure. It's not really a win-win for a really successful trader, like a really good trader. Like, it makes no sense for me to join a firm